A new bill has just been proposed that could classify cryptocurrencies, including Bitcoin and Ethereum, as commodities instead of securities, completely removing the regulatory authority of the SEC from overseeing cryptocurrencies, and instead the CFTC would be in charge of regulations because they're the ones with the oversight for commodities. My name is Joe Brown. This is the Heresy Financial Show, and we are going to talk today about whether or not that will matter for you and if it would be a good move for this regulatory change or not. Ready? Let's dive in. Today's video sponsor is I Trust Capital. It seems like every time we open our eyes today, there is a new form of regulation or taxes being proposed for all sorts of cryptocurrencies out there. And the people who don't need to worry about this are the ones who own their cryptocurrencies in an IRA, because whatever rules, whatever taxes they impose are not going to matter inside of the IRA, because inside of an IRA, anything that you own is sheltered from those taxes, whatever they are. The only thing the IRS cares about with an IRA is what money goes in and what money comes out. But anything that happens inside of the IRA, they're not taxing, they're not watching. And that's where I Trust Capital comes in. I Trust Capital is the easiest, the cheapest, and the fastest way to invest in cryptocurrencies like Bitcoin, Ethereum, and more with your IRA, your retirement account. And for those of us who are gold bugs, they've got something for us too, because you can also buy physical gold and silver inside of your IRA with I Trust Capital. I Trust Capital has extremely straightforward pricing with zero monthly account fee, 1% transaction fees on cryptocurrencies, $50 transaction fees for gold, and $2.50 transaction fees for silver. They use institutional grade security systems that have been time tested and proven to work. And the best part is, if you use my link in the description below, you'll get $100 worth of Bitcoin just for signing up. All right, so Senators Cynthia Lummis and Kirsten Gillibrand have proposed the Responsible Financial Innovation Act, and this would classify most cryptocurrencies as commodities instead of securities. Now, this could potentially be a big deal, but it's not exactly straightforward. Because while this bill would grant authority to govern and regulate cryptocurrencies to the CFTC, the Commodity Futures Trading Commission, instead of the Securities and Exchange Commission, that relies on how the cryptocurrency operates. Because the bill suggests that most of these cryptocurrencies operate as commodities, but there are some that operate as securities, and so there will have to be some differentiation there, and somebody going and looking and saying, hey, this is a security, this is a commodity. So before we move any further, let's take a look at the definitions and the distinctions between securities and commodities. Heading over to Investopedia, we can see that a security refers to a fungible, negotiable financial instrument that holds some type of monetary value. So these would tend to be stocks, these are bonds, these are derivatives. These represent some sort of financial ownership or financial obligation that entitles an owner or the seller to some sort of risk, some sort of guarantee of repayment, or entitlement to some sort of profits. Now, it's pretty clear, at least in my opinion, when looking at the definition of a security, something like Bitcoin really doesn't fall into this camp. There's no profit guarantees, there's no earnings, there's no ownership stake in a company. However, that's not the case for every cryptocurrency. In fact, especially during, the 2017 bubble, when there are a lot of altcoins showing up, there were many of them being issued with promises of profits, with earnings, with dividends, with revenue it was spitting off. And many of them were Ponzi schemes. They weren't real, but still, they were marketed the same way as you would expect a security to be marketed. They were issued as a way to raise money for a company, to invest in a company, and then the owner would be entitled to some sort of compensation from it. That sounds pretty much like a security to me. But let's go over to commodities here and see what a commodity is. So according to Investopedia, again, a commodity is a basic good used in commerce that's interchangeable with other goods of the same type. So what does that mean? That means like corn. So one person grows corn over here, somebody else grows corn over here. It's pretty much the same. They're going to be interchangeable, so they're going to be selling for the same price on the global commodity market. Same thing with soybeans and cattle and copper and steel and all sorts of other commodities. There's not a whole lot of difference. Obviously, there is a little bit of a difference in quality and other things. However, for the most part, they're generally close enough in quality and in their composition. They're just looked at by the global markets as all the same thing. When you look at something like cryptocurrencies, they are usually a little bit more leaning in this camp, especially big ones, especially something like Bitcoin, because it's fungible, right? You can take one Bitcoin and exchange it for another Bitcoin, and they're exactly identical. It doesn't matter how they are mined, where they are mined, who mined them, they're identical, they're fungible. Just like a share of a stock would be completely fungible, right? And so that does make a little bit more sense. But I'd like to take this one step further. I'd like to show you an example with an Excel spreadsheet to show that cryptocurrencies, and especially like Bitcoin, it's not a commodity and it's not a security. And here's where we're going to have to take a look at this. Okay, so take a look at this Excel spreadsheet here, and I've got 5 blue cells here. So I've got 5 blue cells. I'm going to assign a name to each one of these cells. We've got Jack, Jill, Sally, Sam, Theodore. These are the people who own these 5 blocks, these 5 cells in Excel. This is not like a metaphor. Let's say I go out there to the world, I walk around town, and I say, I've got an Excel spreadsheet here, and I will put your name next to a cell, one on either the first, second, third, fourth, or fifth one. That means you own that one cell. Would you like to pay me any money for this? And out of the 8 billion people in this world, I might find somebody who's willing to give me a quarter or a dollar or a penny to own one of these cells. So let's say I've found a Jack, a Jill, a Sally, a Sam, and a Theodore to all say, yes, I would like to own one of those cells. So I literally come in here, I write their name, and that represents ownership. Now this is an Excel spreadsheet, right? So I can share this sheet, and I can, with an email address, I can send it out to people so that anybody who wants to see can look at this Excel spreadsheet and they can see, yes, Jack owns cell number 1. I agree. Now Jack says, okay, well, what if I want to sell it? I'm like, yeah, go find somebody you want to sell it to. I don't care, go for it. And so he goes out to the world and he says, does anybody want to have their name next to cell number 1? And I'll let you do that for $5. He finds somebody, let's say. So then he says, okay, he comes to me, or he just goes in because I've shared it with him, and he says in that next cell over, he says, okay, Jack transfers to Dan. Okay? And so now we have, this was the first owner, was Jack, and then Jack transfers to Dan. So now Dan owns this. And everybody saw this transaction take place because they were all invited to this Excel spreadsheet, and it's got like a change log, so you can go back and go and see every change that's been made. And everybody can see, oh yes, Jack transferred that ownership to Dan and he was paid $5 for it. So now Dan owes that cell. If you notice what's going on here, number 1, this is a public ledger. A ledger is just a list. It's a list that everybody can see. That's an Excel spreadsheet. Number 2, it's just information. That's all this is. It's just data. It's just information. There is no commodity here. There's nothing consumable. It's literally just information. And so regulating something like this is, in actuality, it's leaning over to regulating free speech, because speech is just the communication of information, and digital information is still information, and communicating that information digitally doesn't matter if you have a whole list that's very big and very long with different names and numbers attached to it, and people paying each other for the right to swap out their names and their numbers on that list. That's all Bitcoin is. That's all most cryptocurrencies are. And so starting to regulate that, they're not securities, they're not commodities, it's just information. And so that's a little bit of a rabbit hole there. And so we don't really need to get into that further, because in reality is very different than theory, right? And so in an ideal world, in my utopia, everybody would realize this, and we would just say, okay, hands off. But the uncertainty regarding potential regulation in the future prevents action from being taken place because of the fear of knowing, hey, we could have some regulation on this in the future, so I don't want to start down one path, then have the government come in and say I can't do that, and then I have all of that lost money that I spent, that lost time, and then have to redirect. This is one of the biggest problems with advancements in nuclear energy production technology, because for decades, the rules and the laws and the regulations regarding nuclear development of this technology, the rules keep changing. And so every time they try to build a new power plant, they get a couple years into it, the laws change and they have to go do something else. Then the laws change, they have to go do something else, and they get $5 billion, $10 billion, $15 billion into it, and then realize they can't move forward anymore because now the rules have changed again, and now they're too far into it. They can't go back and redo it the way that they'd be allowed to. And so this is one of the main reasons why there hasn't been as much development for nuclear technology as we've needed over the last couple of decades, and that's why the cost is so high, simply because of regulations changing over time. If there was a promise and a guarantee that those regulations would never change, even if the regulations are bad, then at least you have the certainty and you can learn the new games, the new rules of the game, and move forward with that. And that's what corporations and individuals and investors and institutions, hedge funds, everybody is looking for with this regulatory framework for cryptocurrencies. Because the fear of the regulations coming down the road in the future is preventing these actions from being taken place. It's preventing investment in the space. It's preventing innovation in the space because everybody's scared of the rules changing in the future, and then everything they tried to do is now illegal and they have to undo everything. Even bad regulations are better than the fear of the uncertainty of any regulations. So that's what people are looking at here. They're saying, hey, as long as we can get some sort of framework from the government that says, here are the rules, then at least we can make do with those rules. Even if they're not ideal, at least we can make do with them and then start to innovate. Now we know the framework. Now we know the rules. Now we know how we can move forward, that we're not going to get 5 years down the road and have to completely reverse course and everything we did was just a waste of money. Understanding that there are senators right now that are saying, hey, we need to transfer the regulatory authority from the SEC to the CFTC for regulating cryptocurrencies. That is, by most people's opinions, a step in the right direction, even if that itself is not a good move, which I think is probably a good move. They do operate more like commodities than securities for the most part, especially something like Bitcoin, even though it's even further than that. It's just information. It's not a commodity, but still, any move will allow more and more players to get in, will allow more and more institutions to invest, will allow more and more innovation to have more and more access for people. It will allow large institutions, large companies start to integrate it easier so that more and more people have access to it. And so any regulation, as long as you can look at it and say, these are the rules and now we know they're not going to change, that is a step in the right direction considering the world we live in. It's not ideal. Ideal would be a guarantee that they stay out of it forever and the government never touches it. That would be ideal, but we don't live in a dream world. We live in the real world where there is that fear that the government's going to come in and say something. So having a framework that is a little bit permanent and remove some of that uncertainty will almost certainly be bullish and an improvement in the space rather than where we are at today. Don't forget to grab that $100 worth of free Bitcoin with I Trust Capital by signing up in the link in the description below. And as always, I really appreciate you guys. Thank you so much for watching. Have a great day.